All right, let's go ahead and call the meeting to order. First up is approval of the April 3rd minutes. Are there any changes on that? And if not, do you approve those minutes?
I'm good.
I approve.
Great. Next up, March 2025 sales tax chart. Bill Levine.
Thank you, committee. This is Bill Levine with the Finance Department. I'm going to apologize in advance. I'm a little under the weather. So for those of you used to hearing revenue updates in this sort of Paul McCartney, beautiful voice, I'm sorry you're going to be disappointed today. It's going to be a little bit different this month. So for the month of March, we collected $22.4 million in sales tax. That amount was 1.3 million, or about 6% more than we collected in March 2024. So just on its face, another good month. I think this committee is pretty aware that we started the year with the kind of disappointing results in January. And because of that, we were 2.5 million below our budget plan to start the year. And we have reduced that deficit now down to $1.5 million below budget. So still behind, but we continue to catch up. I think by far the most important story of March, and to be honest, possibly even the entire year, is that we've had really, really strong variable sales tax collections. And so I'm going to define that term because that may or may not be a term everyone is familiar with, but variable sales tax are one-time sales, almost always involving a business-to-business sales that are from month to month very variable. So some things that we get are very consistent, and that's the opposite type of sales tax collections, and some are variable. In total, I tracked $2.95 million of variable sales tax collections in March, and I just have identified a series of companies that meet sort of my unofficial definition of what variable sales tax are. But again, when you look at the numbers, they vary from month to month, and they can be really low one month and then enormous the very next month. So we collected in March, again, about 2.95 million. And to compare that number, the 2.95 million, in March 2024, a year before, we collected about $800,000 from those same companies. So we saw an increase of about 2.1 million from those companies, or 264%. So a huge increase in variable sales tax collection in March. And I really think that is what drove that strong 6% number. Similarly, over the course of the whole year, we have had a huge increase in variable sales tax collection. So not just in March, but over the whole year. For the 3 months of this year so far, we've collected $9.3 million from those companies I've identified as variable sales taxpayers. And to compare that, in 2024, in the first 3 months, we collected 3.5 million. So those are really helping us this year, which is good news. The bad news, to make sure this is clear, is that it's not clear that those trends will continue and that we will necessarily continue to receive that kind of money from those companies in the months to come. So we are in a better spot than we have been, but again, I don't want that optimism to carry forward to mean that we will necessarily continue to see that going forward. On a sector by sector basis, kind of with this idea that things are uncertain, I track 15 sectors of sales tax collections, and 10 of them are actually negative on the year. And so it is the couple of areas, industrial sales and electronics and computers, are really the ones that are carrying us. And it's almost all variable sales tax that are carrying those two sectors. So with that mixed message of optimism and pessimism, that ends my presentation, but happy to answer any questions that anyone on the committee would have.
Thanks, and thanks for pushing through while you're feeling under the weather. I have a couple of questions. So just now you said there were 2 industries doing well, industrial sales and then computers and electronics. Is that like retail computers and electronics, or like what kind of, what does that mean, that industry, when you use that description? Or is that more like business to business?
Honestly, it's a collection of both. And let me just find this number, but the sector does include both, and includes both kind of sales. And I want to find the split. I have it right here at my fingertips. So within that sector, I actually break out companies that I consider consistent, and I break out, and this is to be clear, electronics and computers. I break that sector into two pieces: the consistent piece and the variable piece. The consistent piece would include companies like Best Buy, which granted does more than electronics and computers. It includes Apple, HP, Microsoft. So companies that are selling a lot of relatively smaller things to many consumers. But it also includes some companies that are variable. And within that sector, again, year to date, my consistent electronic and computer companies are actually down 2.1%, but my variable are up 67%, which makes the sector, when I combine the two pieces together, up almost 28%. So there really is an interesting dichotomy just within the sector. So the people, again, who are selling consistently, just a little bit down. The people who are selling inconsistently, generally involving business to business, they're doing really well.
Okay, and I'm not trying to be difficult. I'm just trying to understand. So, like Best Buy, for example, that you just said, is if I go in there to buy a computer, is that calculated under like the computer category, like you said, or is Best Buy all sales tax collected from there, under a specific budget, like, or bucket, like consumer electronics? Like, how does that work?
So I only get a single number for Best Buy. I don't actually have a breakout, for example, for how much of the sales tax we collect from them is from electronics or computers versus, say, appliances.
Okay.
So I'm attributing the entire number from Best Buy to electronics and computers, knowing it's imperfect.
Gotcha. Okay. And then my last question, just kind of overall. So, we're down 1.5 million through March, of 1.5 million of budget. At the workshop, we heard that we are potentially looking at a shortfall of up to 25 million for this year. Are we on track to do a little bit better than 25 million now with these most recent results, or like what does that look like right at this point?
I wouldn't contradict that number. I don't think, fairly certain Greg is not on the call.
Yeah, I actually am on the call.
Oh, Greg, this would maybe be a.
Yep, I can speak to that. I think that we are right on where the leads number is for 2025. It was about, I don't have it right in front of me, but I want to say it was about $5.5 million worth of shortfall. And if you take 3 months at $1.5 million times 4, you're right at that $6 million mark. So I think we're right on the operating side.
Okay.
With the leads numbers. So I would say it's good time to not change from that number.
Gotcha. Makes sense. Thanks. Councilmember Bergan or Coombs, any questions?
Just, and maybe I missed it. What is included in the industrial?
Industrial is going to be, it's in a sense, it's a wide range of companies.
It's not building materials, right?
It's not building materials, but unrelated. So I'm just going to, it's a restaurant supply company. It's a forklift sales company. Supply chain solutions. It's Cintas, who sells uniforms to a variety of different industries. A lot of these are, some of these are a little bit related to construction. So I think there are some construction related, but it's not like Home Depot or Lowe's, to be clear. Some of these I think are also a little more architectural, where they're selling construction services to industries to build things.
Okay, thank you.
Of course.
Councilmember Coombs, any questions?
I guess following on from Councilmember Gardner's questions regarding the budget, at what point, if we continue to see better than projected numbers, would we think that our cuts would not have to be as steep as anticipated? Like, at what point in the year can we really look at that and have any optimism?
We typically solidify our numbers around the May timeframe, and we will go into the future, especially if we're definitely feel like we're off in terms of revenue projections. Like I said, this one feels like we're right on. On the capital side, the capital revenue, which Bill doesn't talk about, we think we might not be there yet. We seem to be dropping a little bit faster, so I'm kind of holding out for that. But with this one, it feels right now. But if we have a couple good months, yeah, we'll definitely adjust. And May/June is kind of the time frame for us to solidify.
Can I ask another question?
Yeah, please go ahead.
Also for Greg Cady. So that's on the revenue side, but then same thing on the expense side, we'll be able in a couple months to see how that looks. I mean, if we're not filling vacancies or.
Correct. We are currently actively working behind the scenes to provide the amount of budget adjustments to balance what we talked about during the spring workshop. So we're on it, and you will definitely get a balanced budget as it comes through, and we'll adjust accordingly. So if all of a sudden we have more revenue, maybe we'll do a little bit more of something, for example.
Okay, thank you.
Mm-hmm.
All right. Any additional questions? All right. Thanks, Bill, and thanks, Greg, for pinch hitting. Appreciate it. Next up, animal shelter lease purchase financing ordinance and project overview. Teresa Sedmak.
Yes, good afternoon. Before I get started on the ordinance, I'm going to ask Jessica Prosser to go through the project, and then I will follow her with the ordinance.
Good afternoon, committee. Everybody see the presentation okay?
Yes, we can.
Okay. And I will move through this. I know some of you have had a preview of this, but in the general sense, working on a new animal shelter, the reason why our current facility is at kind of end of life with systems failing as well as non-compliance. And so we're really looking to build a new shelter that can have really high quality customer experiences as well as serve our animals and the community. So as I just mentioned, the current facility is out of compliance with the state. We have had some waivers to be able to continue to use it. And the remodeling of the current facility is just not feasible at this point. We have gone through that with some architects and designers and decided a little over a year ago that building a new facility was really what needed to happen. And also from a capacity perspective, as we have a growing community and we have not had a new shelter since the 80s from a capacity standpoint. So the location would be on existing city-owned land in close proximity to where the existing shelter is. We're located here around 32nd between Chambers and Airport. That blue box would be in the northeast corner of the red overall box of city-owned land with some existing access coming off of existing ownership and easements that the city has in this sort of industrial area. And then proximity to the existing shelter is important as we may use components of the existing facility, things like our incinerator for cremation services and things like that, that would help us save on costs. So the description of the new shelter overall, obviously a more modern facility, about 38,000 square feet with the ability to hold about 250 animals. The animals would have the ability to be separated. Right now we have cats and dogs sort of in proximity to each other. This would allow us to have separate areas for those. It would also really enhance the customer experience wherein if someone's coming in to adopt an animal, they're excited, or foster an animal. It's an exciting experience where if someone's coming in about a court hold animal, they're coming to relinquish an animal. Those are a different type of experience. We want to be able to cater to those. They're also high quality outdoor space. Right now, we have to cross a parking lot to get to the outdoor space. This would have individual runs. It would also create the ability for the customer to go in and see the animals before they adopt them and walk down a hallway and actually interact with them. We're not able to do that now because our court hold animals are mixed in with adoptable animals. So project funding sources, you can see here we've got general impact fees, as I said, growing community, growing need here. So using the impact fees is appropriate here, basing that on population increase. We have our capital project fund at 5 million, our ARPA funds, which we need to have expended by the end of 2026 at about 3 million. We do have an estate gift in here from a couple of families in Aurora where someone has passed away and left some dedicated funding to the city that we felt appropriate to put to the new facility. And then the COP debt issuance at 27 million, which is really the item on the agenda here today. So for a total project cost of about 51 million. This slide breaks down the relevant sort of construction costs being about 39 million of that 51 million. The soft costs then to make up about the other 11 million includes things like the design costs, contingencies outside of construction, FF&E. We have some specialized equipment, obviously, that goes into this, kennels and things like that, veterinary labs, project management costs, utility lines running, permitting fees, and other soft costs related to technology, commissioning things, inspections, and things like that. So some of these numbers just generated looking at what the contingency costs are that we have built into the model at this point, just show some market things here to note, escalation fees and things like that. So that's where we're calculating some of those pieces for the contingency cost. So obviously, this is a significant investment. We don't feel like it can wait. We've been out of compliance for some time. We also have some of the funding that we need to spend within a time frame, i.e. some of those ARPA funds. So looking at the COPs at about 27 million with some payback terms from 1.6 to 1.8 under a 30-year term. Specific questions from that we can also defer to Teresa on. Obviously, our 2.9 in ARPA costs that needs to be spent in that timely manner. The 5 million capital projects and 16 million from the general capital projects fund. And then the timeline, we're obviously in the design process now, which will wrap up by around the beginning of 2026, looking to bring on a CMGC contractor model in the summer. Obviously, some of the design components will continue on as we bring on that CMGC, which is important because we can do some value engineering through that project by having the two working closely together. And then some, phase construction beginning with obviously grading. This is a greenfield site, as much as we know from working with real property. So pulling in utilities and things like that will have to happen. And then obviously a construction window of about 18 to 24 months. So at this point, I am going to turn it over to Teresa to talk more specifically about the ordinance, unless there's any questions before we transition over to Teresa.
Do we have any questions for Jessica's portion? Councilmember Bergan?
I do. Yeah, and I had asked for the soft costs, so thank you. Just back on the ARPA dollars that were allocated to the animal shelter. In here, you have the 2.9, but we actually, how much was it that we actually approved for the animal shelter out of ARPA?
So I think it was closer to 4, and we have spent some of those already on doing the look at the renovation and things like that and doing some due diligence there. I think you did ask for that number, and I don't think I included it in my follow-up. So let me get you that one very
Okay.
specifically. We did use some of it with Animal Arts to do that exploratory and preliminary design of renovation earlier in 2024.
Okay, and the reason I ask, obviously, in the soft cost that you have on the chart, that you have 1.7 commissioning, inspections, etc. Also 3.1 in design. So none of the 4 went towards design. Is that correct? I thought it did.
So it will go to design. We're spending that ARPA money first because we need to spend it
No, I
down.
mean,
So
I don't mean the current ARPA that is in the budgeted, but what has been spent out of ARPA? Has any of the ARPA that's not showing on this, whatever the previous slide, it has that gone to design? Like, is this 3.1 more design, or?
no, that's just the total. So we've already spent some of that. So we could, from our sources list, we could say what we've already spent. I don't have that number right now, but we could give you a list, like we could give you a total of what we've spent so far on design
Okay.
costs from ARPA.
I'm just trying to see if we can get that 51.9 number down so that we don't have to go out to the market for the entire 27 million. Also, just some of us went to the Accelerate trip to DC and had some conversations with at least one commissioner that I know of, possibly a couple others. And I have no idea if this was just, somebody making that statement, but thought they were kind of open to giving us some money for the animal shelter. So I had asked you and Roberto if staff could have a conversation with the counties to see if they would be open to making some contributions. Obviously, there's a lot of cities: Littleton, Inglewood, Bennett, Cherry Hills, I guess, is in there. So just wondering, Centennial.
Yeah, so we were waiting for you to provide us with the report back. So we've got that now, and now we'll reach out to staff. And we did, in the meantime, in the past week, we did pull our existing agreement with Arapahoe County it's old. It's like 15 years old.
Oh, wow.
And so they are providing us with funding each year. And we also pulled the number of animals that are coming to us from Arapahoe County, mostly from their enforcement officers or folks dropping animals off from unincorporated. So we do have those costs calculated now to have a more informed conversation with their staff.
Okay, great. Thank you.
So I had a similar question, Jessica, when we met, to what Councilmember Bergan just said. So like City of Centennial, for example, fairly large city directly next to us, and they contract out for their animal control services to a private shelter. And so I guess it sounds like staff is working on potential partnerships with other municipalities or whoever else, because, the model exists, right, where cities contract it. And so just want to keep that on everybody's radar, that option, I think, needs to be explored in more detail. And Roberto, you have your hand up. You want to jump in?
No, I was just going to mention, Councilmember Gardner, that we didn't want to put the cart before the horse, right? Until we have council's approval on a financing scheme and a financing, shouldn't say scheme when I say finance, a financing plan for this project, then we could have something that we could actually kind of market to some municipalities to have interest, right? Until we had that concept in council's kind of green light to say, yep, this is something that we were willing to approve in terms of the financing, then I think we have a little bit more of a product to sell folks in terms of renegotiating existing IGAs or entering into new ones, like in your case, your example of Centennial.
Okay. Councilmember Bergan.
Yeah, I just, when you say you want to have a plan before we go and talk to other cities and counties, you don't mean that we approve the 51 million first, because that's not going to put us in a very good negotiating perspective. So
No,
I assume you're
what I
saying
meant by
just that.
plan was approval to move forward on a construction and RFP and actual, I mean, we can't do that until we have a COP in place, right? So it's not, we wouldn't necessarily say, hey, we have all the money in place. We would want to have a negotiation with them and use them and add them to the capital stack. So yeah, it would be just that we have approval to move forward on the project.
Gotcha. Okay, thank you.
Councilmember Coombs.
Okay, so understanding what you're saying then, Roberto, we would, if we approve this to move forward to a study session, there would still be conversations in the intervening time about seeking those other funding sources.
Yes, understanding that I don't know that we would be able to get that kind of commitment. I mean, reasonably, the processes that other jurisdictions would have might take a little longer, would likely take a little longer than, say, if we were bringing this back in the first meeting in June. But certainly we could revise those numbers up and down depending on availability of resources or how effective we were to be able to get other jurisdictions to be involved. But I want to be realistic that I don't know that we'd be able to negotiate agreements with them before we brought this, at least the COP portion of this element, which is the one that will be brought to council for action in June, I believe, and Teresa can confirm that. But there may be other flexibility in the other funding sources.
Chair.
Bergan.
Yeah. I'm not comfortable going to study session, getting approval on the COP, because the whole point is to see if we can get other funding sources before we decide what that final number is on the COP. So, I mean, we're talking about making some phone calls. You don't have to tell them anything's been, we're not negotiating, but we can certainly have conversations with whatever department would be handling. I don't know if that's a public works or what other department it would be with the county, but we can certainly, I would think, staff to staff, have a conversation with. We went to management and finance. The committee is looking to see if we can partner with the county and with the cities, and just like kind of just open up a conversation to see where they're at. I would feel more comfortable with that happening first.
Sure, we absolutely will do that. I'm sorry if I misspoke. That would be the intention. I just want to be realistic whether they would have signed agreements by the time, in a quick fashion. We will do everything we can to get those conversations going, measure kind of the temperature of their willingness to do that, follow up on the conversations you had with specific commissioners, and report back. I just want to make sure that I'm not overcommitting to what they may or may not be able to do in 30 days or 45 days.
Right. Okay.
Councilmember Coombs, did you have additional questions?
Yeah, so I'm just still trying to clarify kind of process and timeline. So could we have the conversation at study session with some sort of information about what outreach has been done up to this point, and then still have time kind of before we're formally voting? Because to Councilmember Bergan's point, if we can reduce the total amount of the COP, I would think we would want to do that before we approve a COP for a specific number and then ink the deal. Or is there, and this is maybe a Teresa question, is there a process whereby we could say we authorize up to a certain amount, and then we end up, like, council authorizes up to a certain amount and staff end up going out and asking for less than that if we have additional resources that get committed?
I'll answer that. Yes, the ordinance will actually say a maximum par amount of $27 million. We can certainly change that number up until the date we go to market with the COPs. One other thing to keep in mind is if you do get contributions from others, we can use those contributions to make debt service payments. And so, I mean, money is fungible, right? So it wouldn't have to reduce the upfront issuance, but it could pay down some of the debt service along the way, so that you could use other funds that were set aside for debt service for other reasons. So something to think about.
Is that it, Councilmember Coombs? Okay.
Yep.
One other source that I had a question about, is there a possibility to put in for, I think it's called like congressionally directed spending, or I know we've put in for other projects in the past. Is that an option for something like this? I mean, maybe it's not, but this seems to be infrastructure, right? And so I'm just curious, thoughts on that as well.
Roberta, I can speak to that. Councilmember Gardner, sure. We have obviously looked into that for this project. The vertical projects, this one in particular would fall under HUD. HUD projects have been very limited in nature. For example, libraries were a huge beneficiary, and libraries no longer are able to receive funds through congressional directed spending. On the vertical side, we've noticed definitely components of the project may be eligible. So that's something we can continue to look at, and obviously speak with Liz Rogers and our congressional delegation to see if there's any appropriations pots that might fit the components of the project.
Yeah, and no, I appreciate that. And yeah, I mean, the entire project may, obviously, wouldn't be covered, but yeah, if there's ways we can offset it, or to Teresa's point, pay down the debt sooner or whatever, I just want to make sure we're shaking those trees. So, okay. Teresa, do you want to go ahead with your part, and then we'll wrap up with any other final comments or questions?
Sure. So Jessica presented part of this in her presentation, so a lot of this is going to sound familiar. The ordinance, which I have introduced, allows for the financing with COPs, which is lease purchase, as you know, in the maximum borrowing amount of $27 million. It states a maximum interest rate of 6%. Rates are very volatile right now, but I did check in with our FA yesterday, and as of today, it's looking like 4.8% if we were in the market today. So we're not close to that parameter yet, and hopefully we won't be, but that's an outside parameter of 6%. We've got a maximum maturity of 30 years. So with a 4.8% interest rate, debt service would be approximately $1.7 million a year, and that's right in the range where Jessica presented as well. Of course, that's subject to market, as you all know, and this is just one piece in the capital stack for the project. So fairly straightforward. Happy to answer any questions. We were hoping to go to market in August, but that may change based on the schedule for the project. But that, as of now, we're looking at an August issuance.
All right, thank you. Councilmember Bergan.
Yes, thank you, Chair. So I don't know how fast you can do math. Is there kind of an estimation of how much more it would cost us if we were at, instead of a 4.5% interest, we're at the 6.5. Like, how much difference does that make?
Well, I can get those numbers. I don't have those with me right now. But the ordinance does have a maximum of 6%, so we couldn't break that parameter. But I can get the numbers and get back to you on what debt service would look like at 6%.
Yeah, I mean, I was just, as we're trying to see if we can get additional funds, bring down the COP, but then also want to make sure that the interest rate obviously is important to keep it as low as possible. So just looking at what that difference would look like depending upon the market.
It wouldn't be insignificant, and again, that's why we appreciate our strong credit ratings, because we do get preferential interest rates in the market because of our strong ratings on the city. So I can get that outside number to you. I don't have it.
And then just follow up based on credit rating. I know we did the COP for the road maintenance. and we're still paying that down. And we have, I think, a few others that we're paying down. So if we added this debt, how does that, are we still able to keep our credit rating in good standing?
Yes, there's no reason to think our credit rating would be affected in any regard.
And I think we have is it the municipal building that is due to be paid off in a few years?
That one's coming up. Andrew, are you on the call? Do you know when that particular one rolls off? In the next couple of years, I believe.
Okay. All right. Thank you.
Teresa, can I clarify?
Yes.
The AMC rolls off in 2031.
Oh, 2031. Oh, okay.
Council Member Coombs, any questions, comments, anything?
Nothing further from me.
Okay. So I more just have a comment. And I'm still really struggling with this one because we have a lot of needs in this city. And, you know, I understand this is certainly something that we need to do. We're outside of standards, but I will also say, you know, we have residents in this city that live outside of NFPA standards for fire station response. Like, you know, part of being a city is making tough choices with limited resources. And so I'm really struggling with this being the highest and best use of issuing more debt when, like I said, we have residents that are outside of standards as well. And, you know, I'll just say it, I place a higher value on human life than I do on animal life. So I'm still undecided on this. I do think, you know, it should move forward because I think this is a conversation that all of council should have, you know, and I will say thank you to Roberto and Jessica and everybody. I'm sure that lots of others have worked on this, you know, really appreciate all the time. And none of my comments are in any way intended to, you know, be critical of staff at all. You guys have done a great job putting this together. It's just, you know, sometimes we have different priorities, I guess, or I might have different priorities. And so that's really where I'm struggling. But, you know, great job to all of our staff for all the work they've done on this so far. So with that, I mean, I'm fine moving it forward. Councilmember Coombs, Councilmember Bergan, any other thoughts, or are you okay moving it forward?
Yeah, I mean, I'm good. I definitely want to move it forward. I think, you know, your points are very valid, and I think this one being a little bit different in the sense that we have monies that we have allocated through ARPA and other sources, and then also the fact that we're not in compliance with our current animal shelter and we've outgrown it. So I think that those factors are important to consider as well.
Okay, thank you. Councilmember Coombs, comments? You okay moving this forward?
No comments. Yep, I support moving this forward.
Great, thanks everybody. Appreciate it. All right, next up, Teresa, back up again, 2025 debt book.
Yes, so included in your packet is the current version of what we call the debt book. It's run by our financial advisors, and it's as of the first of the year. It will show all of the debt we have currently outstanding, and that's city debt, Aurora Water, Sewer, ACLC, and then we have some enterprises like golf and some other units that actually have financial obligations outstanding. So it's a good source of information for what exactly we've borrowed against, what our repayment looks like or amortization over time. Actually has the latest ratings report in it, so that might be of interest to you. It also has the cover of our disclosure documents, which outlines the project. So gives you a lot of information. It does reflect every year we have repayments. Those are reflected in the numbers as well as any new issues we have. So last year we issued a fleet lease for heavy fleet. We also did some golf equipment, and we did a big deal for Aurora Water last year. And this year we're getting ready to do an $85 million deal for sewer. And then again, the $27 million COP, which is anticipated, obviously subject to approval. So it's a good reference material for you. It'll give you a lot of information. and happy to answer any questions, but this is just information only, and I wanted to let you know what's involved in the debt book. It is updated every year, so you'll see this again next year.
Yep. Appreciate that. Yeah, a lot of good information in here. Council members Bergan or Coombs, any questions?
No, I will read it to try to put myself to sleep. I'm just kidding.
That's fine. No offense taken.
Councilmember Coombs, anything?
No additional questions. I appreciate having the information.
All right, thanks, Teresa. All right, that was the last item on the agenda. Looks like we are scheduled for June 5th at 1:30. If either of the council members are not available for any reason, just reach out to me as soon as possible, so at least we can make sure we have a quorum. But otherwise, we will plan on June 5th at 1:30. And with that, we'll be adjourned. Have a good day.
Thank you, you too.
Thank you.